for partnership. So again, when we talk about so much benefit, more popular in California, there's use LLC to own the title. Okay, all right. So we will switch to another topic. Okay, this for individual. We need to finish our individual. Eventually, at the beginning of this semester, we talk about individual, and then let's go back to individual. 1040. I believe at the beginning we talked about the income and so many different kinds. How about let's go back to adjustment. Okay, adjusted income. Anybody give me an idea? What's the difference between adjustment and deduction? We have we have 4 terminology. Do not mix up. The easy one, okay, I think the easiest one, or the best one, is called exclusion. Okay, let me write it on the board. Okay, there are, for individual, by the way, okay, for individual, there are 4 different kinds of terminology after income. Okay, the first one we talk about income, and remember, if there is no tax law to tell you everything is income, you pick up $1 from the street, that's your income, all right? Unless there's something excluded. So what have we done here? This almost big number, right? We say almost everything. Just put on here. Anything. But luckily, we can find out something exclude from the IRC. So the best thing we want to find out is called exclusion. Exclusion means even though this is the income under definition, however, the law just give you the benefit, say, all right, it is not. You don't need to count it. Even you receive it, you don't even report. Anybody still remember anything? Just give me one idea. Anything? Very popular exclusion. Gift, receive, very important. Okay? Keep this in your mind. If you receive anything, gift is not. Doesn't matter how much money you receive. Okay, by the way, we're talking about gift tax, but the gift tax is not paid by the recipient, it's paid by the giver. So, very important. You receive gift, totally free. So related to this is from inheritance. You're lucky you have very rich parents. So doesn't matter how much money you receive, totally tax free. Again, we're talking about estate tax. Estate tax is paid by the decedent who never died. That person paid for the estate tax. So we have 2, one gift, one inheritance. What else? Very popular one, very famous one.
Is alimony?
No. Alimony is taxable. We're gonna see it. Alimony eventually is under the income. Like child support. Child support is tax-free. Child support is tax-free. Okay. So very similar. Okay. But however, spousal support is not tax-free. Child support is tax-free. So the third, how about another one? Very important one. I just want to give you the idea of very important one.
Donation?
No. Donation is gift. Don't mention that. Don't mention that.
Municipal bond interest.
Say it again? Yeah. Yes. State or municipal bond interest. State level. But you need to have a question mark here. Okay, let me say it again. For state, for the city, for the county, for the school district, municipal bond interest. But that is only tax-free at federal level. You need to pay for stay. Too bad, you know. But anyway, it counts. What else? Number 5. There's another one. Very important one. At least another 2. The other one is for your owner-occupy, your primary residence. You live there more than 2 years. You sold and your capital gain under $250,000. That is very generous. For the husband and wife, it is $500,000. Okay, this is tax section 121. Always remember that. Section number 121. Eventually, the tax section around 100 something. You do the research. 100 something. They are talking about exclusion. You want to find any exclusion? They're there. And the other one is for the bodily injury. Bodily injury. For any bodily injury, you receive the compensation, or you receive any recovery. Okay, because you know you have a bodily injury caused by somebody else, even paid by your employer, paid by the person who caused this, and they are all tax-free. Another thing I can remember that is life insurance proceeds. Life insurance proceeds. But be careful, okay? Life insurance proceeds, for example, for parents, because you know life insurance is more like saving, right? There are multiple functions for life insurance. Could be protection, but more importantly, there's like a state transfer from last generation to next generation, tax-free. That's a good deal. But be careful, life insurance proceeds is income tax-free. Income tax-free. But it is not. It's a state tax again. So we're talking about state tax. Right now it is 5.12 million right now. Okay. For this year, state tax is $5.12 million free. But for very rich people, they bought the say $10 million life insurance. Then you need to consider transfer this to a irrevocable insurance trust to separate it. Otherwise, you get the wrong income tax level. However, you'll be caught. You'll be caught at the state tax level. So this is why I want to bring out this issue. One, you know, again, because so far we only talk about income tax, but don't forget there's another area aspect is gift tax or state tax. If you want to save the money, you need to consider the whole thing. All right. Any other thing?